Welcome back to another episode of Pure Perspectives. I'm Clark Alexander. I'm here with Gary Pierce. Gary's down in Texas. I'm in California. How you doing, Gary?
Awesome.
Hope
Happy
everybody had a
po-
nice long weekend. Now,
good Labor Day.
good Labor Day. Football's back.
Thank
NFL
goodness.
this week. Let's go.
Yeah, the world is back on its axis.
Yeah, everything's fine. There was college football on TV. Everything's fine.
Mm-hmm.
Quick reminder, smash that like button. Smash it. Leave us a comment. We're going to start pumping out some weekly updates. We'll do those on Mondays. Talk about what's coming, as far as financial reports, things that could move the market, could move the needle, and then just historically, where are we sitting? What's the market looking like? So, Gary, let's start off with what should we expect this week? Any news that's coming out that might have a impact, positive or negative, on rates?
Yeah, definitely. Tomorrow starts some jobs reports. If you remember last month, we had the big discrepancy around the numbers. There's a ton of bad data, I guess, if you will, that needs to get figured out. I would expect to see some more downward revisions, which we've been getting for the last, 24 months. It seems on like clockwork. This happens. So this week is jobs. What that means, again, bad news to the economy or in general is usually a positive driver of mortgage rates. We started to see that a little bit a week or so ago when that original jobs report was launched or released, driving rates down a little bit. So we could see a little bit of a break, but still, still mortgage rates are choppy, right? But they're staying in a range, right? Like there's no huge spikes. Thankfully, we're staying in a range. 6.5, 6.75 is kind of where I'm seeing most of our deals falling.
10-month low we're sitting at right now, so rates are good. I think what you hear in the news is probably inventory is high. We're seeing, I think the numbers are 500,000 more homes for sale than there are buyers. So would you say that just is people hanging on the sideline waiting for lower rates?
Yeah, I think that's, and you're starting to see a softening on the home values too. We're seeing that on refinances, especially where, these appraisals are not coming in favorably, a lot on refis. So it's getting trickier on the refi side. So really got to sharpen our pencils on that. But I think there's just a combination of factors. Sellers are not getting what they want or what they think perceived value of their current home is today. And so it's, if, you're going to be jumping out of that 3.5% rate into something higher, call it 6.5, 6.75, that additional cash, if you're not getting that full, what you feel is a good, fair, full price offer, then it just doesn't make sense. And we're seeing people just take those listings right off the market.
Yep. The stuff is, it's still a little bit mixed here. I think some houses come on, dawn. Some are sitting. It's been a long time since realtors around here. I've had to have price reduction discussions. Those are going on. So, it is definitely softening, hopefully with lower rates coming, or we're starting to see lower rates that we'll see some more activity. But generally, when we talk about cash out refi, those sitting on, we talked about it last week, those sitting on debt, leverage that equity in your house. It's pretty cheap money to go pay off some high interest debt. So there's still opportunity out there. Yeah, I'd say we've had a steady run here for a couple weeks of hanging out in much more favorable terms.
Yeah, I think you'll see this week and next week's obviously the big conversation with the Fed. I think it's the 16th or the 17th next week of September. And so we've got, we'll see what happens, and, what the Fed does and what they say will really kind of open our eyes to what the next 90 to 120 days looks like. Get us through the end of the year. I think in general, deals are still looking good. We're seeing deals coming in, with pretty good, still getting some decent value on the sales side, but also the buyers are seeing those seller credits come over. So if you get a $350,000 and you get $3 or $4 grand in seller credits, that 25% of your closing costs right off the top, that not a bad deal.
No.
So
No.
a lot of deals to be had on the buy side if you can find the right situation.
Yeah, I agree. I think, get your mortgage plan together, reach out to us. Let's talk early. Let's not be in a rush. We can get a read on where you want to be, what cost you can entertain on a new mortgage. So it's best to get ahead of it, build your plan, have all your ducks in a row before you get out there and start, shopping around.
Absolutely.
All right. Well, thanks, Gary. Thanks for the update. We'll be back. Obviously, as Gary said, Fed meeting coming up, so we'll be back with an update next week. Hopefully, we continue to see downward movement and much more volume in the space, because we would like more volume.
Agreed.
Give us the volume. We'll take volume.
Let's
please.
go.
Yes.
Let's go.
All right, everybody. Have a great week. We'll be back next week. Look out for more content coming from us this week. Have a great week, Gary. We'll talk soon.
Adios. Bye.